Hello everyone and welcome back to YouTube channel of Castaway Trader. Today we will talk about counting Nasdaq 100 index, and to do that we will go to the beginning of the days, meaning to the first data I have on my platform to early 90s. Just to remind you, I have a website called castawaytrader.com. You can also follow me on Twitter, Castaway Trader. First, please read that important information. Okay, let's get started. So this is how monthly Nasdaq chart looks if you put on one screen the whole history I have from 1985 to 2018. So clearly we have a bullish trend and we have two major segments of that move up. So let's get reminded ourselves about the basic pattern. We first try to identify those first 5-wave move up of the low, then corrective move down in wave B, and then another resulting move up of the bottom of B, which is another 5-wave up, and that would be A, B, and C, comprising parentheses 1, wave 1. So let's try to identify that pattern on the chart of Nasdaq. And we will start working with a weekly chart. So clearly we have A, B, and C into the top made in October 1989. I counted as wave 1. Then we have a clearly corrective wave down, A, B, and C. That would be our wave 2 down. And it bottomed in October 1990. Then basically what we normally look for is two elongated legs, which would comprise the strongest part of the move, which is wave 3. And clearly we can identify them here easily. A, B, and C, you see, and those two legs comprising wave 3 topped in May 1996. Then we got corrective 4 down. And by the way, look at the great alteration here. It was a very deep wave 2, correcting 76%. And then we have a relatively shallow wave 4, correcting only 23%. Again, here was a sharp drop, very simple structure. And if to speak about corrective wave 2, it was more complex structure, A, B, C, it took longer. Okay, so let's get more data. Now we have the data from 1989 to 1998, and this is our shallow wave 4, and of the bottom of shallow wave 4 we normally expect A, B, C up, where A would start somewhere close to the top of the preceding top in wave 3. Okay, so we topped in first 5 waves up in July 1998. So we counted is our larger wave A, and then of that larger wave A made in 1998, we got a corrective move down that was a corrective wave B, bottomed in October 1998. Again, let's get reminded ourselves about our basic pattern. This is our 5 up in A, this is our 3 down in B. Again, you might say, look, it's not very clear structure in B down, but this is what waves B normally do. They just shake you out of the count, they are wild cards, and you cannot expect a very clean count in waves B on any degree. So if we got A up and B down, so here we should expect another 5 up, which would complete wave C, and that the whole structure, meaning that a wave 1 of a larger degree would be completed. So let's try to identify those another 5 ups. It's kind of not very clear structure, but here we can clearly see that we may count it as wave 1, shallow wave 2. Here we could say A, B, and C of wave 3, and this is clearly elongated 2 legs which would comprise wave 3, and here we would have something like wave 4 and another move up which would count as wave 5. But we could say that it really fits with our expectations. As for A, B, and C, look, C here stretched to 209% of A. It's a pretty classic extension. So I would count those huge moves of the beginning of 1980s or 1990s as A, B, and C up, of a huge wave 1 up into the March 2000. So then we should expect, once we actually complete wave 1, we should expect wave 2. And if we zoom out and we understand that once we complete ABC and we complete a wave of a larger degree, we should get a corrective wave of a larger degree. So basically, because we deal here with fractals, we can use the very same pattern to understand where we are on a larger scale, on a higher degree. And on a higher degree, this is what we just completed by March 2000. We got A, B, and C, remember, wave 1, and this is where we are on the global scale. So once you complete wave 1, so you normally expect a corrective move down in wave 2, and those wave 2s normally get very deep. We may get to 61%, 76%, 85%, but you can also see super deep ones like 90% or even 98% of the wave 1, meaning they may retrace almost the whole wave 1 of the low, but never more than 100%, because that would invalidate the whole structure. So wave 2 should never breach the starting point of wave 1. So let's come back to our chart. Okay, so basically once we complete wave 1, we should expect a corrective move down in wave 2, and this is what we got. So remember, those corrective waves are much more difficult to track than impulsive waves, because Elliott wave theory is catered more towards impulsive moves. In corrective waves, we have much more variations. In this particular case, we got A down, B up, and C down. Basically, we got enough, we covered enough distance to make it all of 2. It would be perfect A, B, C down. The problem was the market was not ready just to go up. So in this case, we count the first ABC as W, then the initial move up as X, and then market makes another shallower ABC down, just to burn time, just to kill bulls' hope, and just to build enough base of bearers who would keep shorting that, and basically those shorts would power the market on the way up. And this is what we got. We got ABC of W, X, ABC of Y, and that would become our whole corrective wave 2 down, and it bottomed in October 2002. So basically more than 2 years from the top of March 2002. Okay, so where we are now, we completed 1 up, 2 down, and here we should expect start of the strongest part of the move, wave 3. And under harmonic Elliott wave, wave 3 is almost built of 3 legs, A up, B down, and C up. And inside those A's and C's, we should see 5-wave structure. Okay, let's try to see basically what microstructure we may get of that important low made in October 2002. So here, as you can see, we switch to daily chart. We need more details because we are going 1 degree lower. So that move into November 2007, I would count as 5-wave move up. It would be A up, then corrective B down into March 2009, and another 5 up into March 2012. I would count it ABC as 1 up, then very shallow, like negligible wave 2 down. And again, on the macro level here, again, we should expect here A, B, and C, which would comprise wave 3 on that degree. And we got A, we got B down, and we are working on C up. And once that C up would complete, basically that would be wave 3. And looking at micro, we can see that starting from that point, we got A, B, C of 1, shallow 2, A, B, and C, which would comprise wave of 3, and very deep and fast wave 4, or maybe just the first leg of wave 4. Because look at that. So on any degree, all the rules of harmonic Elliott wave should be followed. And here we have a very shallow 2 down. That means that wave 4 should be deep and it should be complex. So what we may have here is that really can be just wave B, A of 4, B of 4, and C of 4. That would basically satisfy the alteration rule. The alteration rule says that waves 2 down and waves 4 down should alterate in depth and structure, complexity of a structure. Once you have a very shallow and simple wave 2 down, wave 4 should be not only deep but complex. And I would not call that sharp drop as a complex correction. So what we can get here is like as a expanded flat, we could get A of 4, B of 4, which makes another high over the top of 3, which is pretty normal, and destructive and fast wave C down, which would make lower low than the low made in A of 4. The bullish interpretation though is that wave 4 is completed and we are working on wave A of 5, which remember should stall around the top of wave 3, and then we should see a pullback, a corrective move in 3 wave down or some other corrective degree in B down. So let's zoom in further. So this is what we have in case we really work on a corrective structure, on a bullish structure. So here under that count we say that 4 is done and we are working on the 5th up. And 5th up should consist of A up, B down, and C up. And that would complete that parenthesis C and a larger wave 3. Under the bearish case though, that really can be counted as 5 down of only A of 4. You see, it would be small 1, 2, A, B, and C of 3, 4, A, B, and C of 5, and would be only A of 4. But in both cases it seems like that current move up has had enough waves to consider it completed. So in any case we should start the move down in corrective B pretty fast. Again, in case of a bullish count, so ZB may stop here around 50 to 61.8% of the retrace of that move up. In case of a bearish count where it was A of 4, that move up was B of 4, that C of 4 should get under that low. Or maybe just to double test that low around 66.33. Okay, thank you very much for your attention. I'm trying to make shorter videos just not to burn your time. You can check the latest updates on my website castawaytrader.com and follow me on Twitter, Castaway Trader. Thank you and good luck with your trading.